we'll be going over CP Notice 11. This is an IRS notice that has to do with miscalculations on a tax return, which the IRS believes has led to an underpayment. So if you receive this notice, this generally means that the IRS is expecting you to agree with an assessment where they reviewed your tax return, determined that you made some sort of a mistake or a miscalculation, and their estimate is that you owe taxes and possibly either interest or penalty or both. So this example is a fictitious example, and I'll point out why in just a moment. But I downloaded this in the from the IRS website so that we can walk through it step by step. Okay, so the primary reason why you can tell right up front that this is not a real CP notice, other than the fact that there's no real taxpayer name, no real social security number, is the fact that this has to do with a 2017 Form 1040, and the notice date is January 30th of 2018. So first off, you wouldn't expect to receive an underpayment of your tax notice on a Form 1040 when the due date of that 1040 is 2.5 months away. So let's go over this so we can kind of walk through, make sure that we understand everything that you're supposed to look for, in case you're wondering what is in that envelope that you just received from the IRS. So as with these IRS notices, you'll see the type of notice, the tax year of the notice date, your social security number, all in the upper right hand corner. You'll see a phone number of, how to reach the IRS to talk about this specific issue. And then you'll see how many pages your letter should be. So in this case, this is page 1 of 6. So I've done kind of the legwork already. I've verified that there are 6 pages to this document, and we are going to go over them. So right here, you can see how much the IRS believes that you owe them based on mistakes that they believe you made when calculating, in this case, the child tax credit and the earned income tax credit. So, quick summary, the IRS says you owed a certain amount of money, you made a certain amount of payment, plus there's a failure to file penalty, plus there are interest charges on everything that was stated here. So the IRS always will say this is what you should do immediately. So if you should review every notice as soon as you can. And then if you agree with the IRS, hey, I made a mistake, go ahead and pay the amount due. Now, this is the due date, February 20th, 2018, to pay the amount that's stated on the bill. So if you pay before that, you still owe this much money, but if you pay after that, then you may be subject to additional penalty and interest charges. And then the IRS gives you the options of how you can pay. You can pay online. You can mail a check or a money order with this attached. So you would want to follow the instructions by making the address out to the IRS in Austin, Texas. You want to make sure that this is postmarked well before February 20th. You want to make a check or a money order payable to the United States Treasury with your social security number, the tax year, and the form number on your check or money order. So if you disagree, then you have 60 days from the time of the notice, the date of the notice, to contact the IRS, in which case they explain right here, they'll reverse the change that they made to your account. You don't need to provide any explanation, but they will consider it. So basically, this is not an audit, and the rest of this is basically your appeal rights. So if you contact the IRS, according to this letter, within 60 days, then they will basically kind of put a pause in the collections process for the time being. So now, when you do that, then a couple things may happen. The IRS may forward your case for a full-blown audit if you don't justify why the reversal should have taken place. And if the IRS determines, hey, this person just asked us to stop the collections process, but they never gave us any information. So they can go ahead and forward it for an audit. Now, and it kind of walks through what those steps might look like. They'll forward your case for an audit. The audit staff will contact you within 5 to 6 weeks to explain the audit process, your rights as a taxpayer in the audit process. And then at that point, you may have to provide an explanation or additional documentation. Now, after the audit happens, you do have formal appeal rights. That includes going to court. You can appeal a decision in tax court before you have to pay the additional tax. Now, if you don't contact the IRS within 60 days, they're not going to reverse the charges, and you have to pay additional taxes as they may accrue. So if you do disagree, you should call the number. It should not say XXX on it. It should actually have an 800 number with a representative. Now, be forewarned, this representative, they work for the IRS. They have an obligation to be objective, and if you do provide information that proves your case, then they are required to consider it. However, appeals on an emotional basis usually won't go anywhere, so you need to be prepared to bring documentation or something substantive that allows that representative to agree with your assessment. So the IRS indicates that they operate with the assumption that you agree with everything if they don't hear from you, in which case that means they're going to proceed with the collections process. So they give you payment options. You can talk about setting up a payment plan or like an installment plan. You may be asked to fill out, IRS Form 9465. You can submit an offer in compromise. There is a process to evaluating offers in compromise, and there is an entire industry of people that make a lot of money by helping taxpayers navigate through that. You can also just make that payment. So I know this happened to me maybe 25 years ago. I had just graduated college, redeemed a bunch of savings bonds that I didn't need to use for my college, and completely forgot to report a couple of them. And I got a CP11 notice in the mail, recognized, oh, yep, this is income that I did not include on my tax return. So I need to make that payment. And so just because you receive a CP11 notice doesn't mean it's a bad thing. It may mean that you actually made an honest mistake. The IRS just calculates your tax bill. They're required to add interest charges, and then you move on. Let's see, on page 4, it starts to explain what exactly happened to your tax return that the IRS disallowed. So in this case, there was a problem with the child tax credit and the earned income credits. So the IRS disallowed either part or all of the child tax credit or the additional tax credit. Apparently, in this case, one or more of the children claimed as a child for credit purposes was not eligible. They were too old, so that's why that tax credit was disallowed. The IRS also changed the amount claimed as earned income credit on the tax return based on an assessment that the amount that was claimed was incorrect. So the total tax came out to the exact same, basically line 37. So your calculation ended up being 1828. The IRS calculation ended up being 1828. However, the difference ended up being in the other credits. So that the other payments and the total payments and credits ends up being here. So now in this case, this apparently appears to be a failure to file penalty that was tacked on. Now, the minimum penalty, which is $210, that is only imposed when a tax return is more than 60 days late. So it's either $210 or 100% of the tax that's required to be shown on the tax return. So, so there's an explanation of the failure to file penalty. That seems to be a fictitious example. Again, with the notice date happening 2.5 months before the due date, that sounds like they just put that in there for illustrative purposes. So there is an explanation of how you may request removal or reduction of penalties. There is a penalty abatement form called IRS Form 843 that you can request either a refund or a penalty abatement. We'll put links in the show notes to some of the forms, for resources for some of the forms that are mentioned here. Removal of penalties due to erroneous advice from the IRS. So if you requested advice and you were penalized based on written advice that the IRS gave you, then you can submit that again on Form 843 and you would get that removed. The IRS is required by law to charge interest on outstanding tax liabilities, including penalty charges. So in this case, we show $21.73 of total interest. And then on the next page, it shows the interest rates that are applicable during the outstanding periods. So in this case, October 1st, 2016 to December 31st, 2016, that compounded daily would be an interest rate of 3%. And then here, beginning in January 1st of 2017, the tax rate was increased to 4%. And again, that's based on prevailing interest rates as they change over time, and that's prescribed by federal law. So there is additional information. You can learn about your rights as a taxpayer. You can learn about the collections process. You always have access to the latest versions of tax forms, instructions, and publications on the IRS website. So the rest of that letter goes to kind of giving you that basic information. Now, the IRS website keeps a page to help try to explain what happens with your CP11 notice. And there are some frequently asked questions, like how do you adjust estimated tax payments? You can do that by submitting IRS Form 1040-ES, which is the estimated tax form. You can use that to count, like there's a worksheet in there that will help you actually calculate what your estimated tax is for the year. How can I find out what caused my tax return to change? That should be described in detail in your CP11 notice. So if you have questions about that, or if there's a calculation you don't quite understand, you would call the IRS at this 800 number to get a better understanding. What should I do if I disagree with the changes? Well, you should follow the instructions in the letter if you disagree with the changes that are proposed. And the first thing that you should do is contact that 800 number to get a better understanding of the situation. Will you be charged interest on the interest you owe? Absolutely. That's required by federal law. Will I receive a penalty if I can't pay the full amount? Yes, there is a late payment penalty that's applicable. You can request penalty relief. However, a late payment penalty generally is 0.5% of any underpayment of an outstanding balance for each month or a part of a month. So that accrues as long as there's an outstanding balance or up until the total interest has reached 25% of the outstanding tax liability. So the IRS does keep a running calculator. This is kind of like a payoff statement for a mortgage. Like if you decide to send a different payment, then you can't just do the calculation on your own. You have to actually ask the IRS to come up with an assessment based on the amount of time that has passed and the interest that's accrued. So just like you can't You can't look at your home mortgage statement and say there's $300,000, so I'll send a check to the mortgage company for $300,000 and call it good. You have to actually request what that statement would be to pay off the total amount. And again, you pay that by a certain date or the interest keeps accruing. So that's all we have, I think, for this video. Like I said, we'll put links in the show notes to articles and videos that we've created about some of the tax forms that we mentioned here. So if you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions, comments, or if there's a tax question that you would like to see in an upcoming video, please hit me up in the comment section. Thank you very much and have a great day.